Welcome to the Equity Market Minute by Bloomberg Intelligence. I'm Gina Martin-Adams. There was some herding behavior evident in the equity market this summer. Two trades really stood out to us: high dividend yielding equities and domestically oriented stocks, outperformed by a wide margin. We might see these trades reverse now that trade policy risks are abating. Let's take a look at this first chart. What we have here is the 10-year Treasury bond yield inverted, plotted against flows to income-oriented ETFs. As you can see, usually in the summer months, investors do put money to work in dividend-yielding stocks. However, that is usually supported by a 10-year Treasury yield that's falling. Instead, the 10-year Treasury yield rose this summer, opening up an odd divergence here. My second chart shows the dollar, and clearly there was an impact of a rising dollar this summer. The combination of a stronger dollar as well as rising trade risks created a pretty big outperformance wave for domestically oriented companies in the S&P 500. This chart shows that as the dollar rises, you do tend to see domestic stocks outperform. And from April to August, they outperformed their more multinational counterparts in the S&P 500 by more than 600 basis points. If we are on the verge of slightly lower trade risks, a potential turn in the dollar, or at least a dollar that doesn't rise quite so rapidly, we might see these two trades start to unwind as the year progresses. Thanks so much for joining me for the Equity Market Minute by Bloomberg Intelligence.